Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Matthew Piepenburg. He is the commercial director of Matterhorn Asset Management and the co-author of the new book with Egon von Greyers called Gold Matters. Welcome back, sir.
Well, it's great to be here. Looking forward to this.
Matthew, do you believe we are seeing the end of Western dominance of the financial system? And why isn't it not being discussed more openly as it should be?
Well, the short answer is yes. I think we are for a number of reasons. I think it's a process, not an overnight event. And there's so much evidence of this. It's been, I think, accelerated by COVID policy, accelerated by sanction policies in the Ukraine war. And I also think the reason it's not being discussed is because it's too openly embarrassing to be honest about. There's a failure of candor and honesty in the media, and of course in politics. It's groupthink and it's a message think, and there's not a lot of room for contrary voices. And to the extent there are intelligent contrary voices, they're usually not promulgated or allowed to speak in an open way, which is in itself an irony given the countries we're both speaking from, France, the US, Canada, all famous for their freedom, democracy, liberté, égalité, and yet it doesn't exist in the same ways. So that's my short answer. One of our advisors I keep quoting, Grant Johnson, had said in an interview earlier in the year that in many ways, February and March of 2022 were as big a moment in the fiat currency new normal as, say, 1971 August was when we got off the gold standard. Because what the West did to itself in pointing the finger at Putin and the sanctions, and again, you always have to caveat this by saying, I'm not pro-Putin, I'm not pro-China, but you have to be critical of Western policy in this particular case. Without getting into the details of how this war, I think, could have been avoided and all that goes behind that, the fact that when the war happened in the Ukraine and the immediate reaction was to politically virtue signal sanctions, taking Russia off the SWIFT access, freezing their FX reserves, taking them off SDR access, all these chest puffing, virtue signaling, mighty West moral and financial policies looked great in the first 10 minutes on the headlines. And yet, absolutely, in my opinion, and many others, backfired as predicted. It's kind of like I joke: if you have a bank account at Wells Fargo and they freeze your assets, you're not going to recommend Wells Fargo to your friends. And so, what the West did on those sanctions to Russia made other countries kind of raise an eyebrow and think, boy, they're weaponizing FX reserves, they're weaponizing finance, they're weaponizing what should be a neutral reserve currency, and that's making the world in general less trustful or less trustful of U.S. policies and U.S. or Western financial policies and the U.S. dollar in particular. So it's a tipping point. It's a major tipping point in the U.S. leadership and in the dollar's so-called neutral role in the world. And when you tap on this slow demise of the petrodollar, this transition with already U.S. debt levels and U.S. currency debasement, it's a genie that can't be put back in the bottle now. So things are accelerating. Short answer, Ivan, yes. U.S. Western hegemony is taking a gut punch right now.
But you see Putin's talking with China, India, Brazil about this new BRICS reserve currency that they want to make sort of commodity backed. And now the latest rumor or the news reports I've seen are Saudi Arabia is possibly joining also, which might even lead to a big portion of OPEC joining. Mm-hmm. This weaponized, did we shoot ourselves in the foot? Maybe with this, I think you already answered that in your previous answer that yes, we have shot ourselves in the foot by pushing Russia more towards the Eastern Chinese banking, Chinese trading system. Yeah. How does this affect us? And you're right. Also, gold. What was it? I had not heard Condoleezza Rice's statement that Russia will run out of cash before the West runs out of energy. But Russia, that was an old statement. Russia now has lots of gold, right?
Yeah. Well, again, I think China and Russia, again, not pro-China, not pro-Russia, not pro-war, not pro-Putin, you got to caveat this, but you can say many things about Russia and China, and you can say many things about the West, but one thing Putin in particular and Russia in general is stupid. They play chess, literally, and they think the long game here, and Putin and China have been watching the West in general, and the US particularly, live over its skis in debt, live beyond their means for years. And again, I'm a capitalist 100%, but what we have seen in the last 15 to 20 years is not capitalism, it's Wall Street socialism. When central banks try to solve a debt problem with more debt that they then pay for with money created out of thin air, that's not natural capitalism. That's not natural supply and demand. That's completely distorted capitalism. And the West has been openly pretending that this was a solution. And Putin and the Chinese and the Russians who sit around and think long term know that that wasn't a sustainable policy. And they knew that the dollar wouldn't be able to bully itself for eternity. I mean, America could inflate or export its inflation to other third world countries or developing economies for decades because the dollar was a world reserve currency. Debts overseas had to be paid back in U.S. dollars. There's a natural demand for debt. They could inflate or debase their currency, and yet there would always be demand. And countries like Argentina to Venezuela had to pay back debts in U.S. dollars and inflate their currencies, debase their currencies to pay back debts. So we were able to export inflation for years and be a bully. We were a bully from Iran to Venezuela to South America, but you can't bully a nuclear power like you can developed economies. And so when they decided to puff their chests in front of Russia, that was a militarily dangerous thing to do. It's also financially naive and short-sighted because Condoleezza was wrong in 2014 and especially in 2022. Russia does have more cash than we have energy, and they can't afford to outplay that game of chicken. And more importantly, they're going to do more and more bilateral and multilateral agreements with other countries from China to Brazil in other currencies besides the dollar. And that's going to weaken dollar demand and therefore weaken dollar strength. And that's a bad thing in the background of a country like the US that's already up to its ears in debt, unpayable debt.
Well, so why isn't gold responding to this? Why is gold down at 1700, mid 1700s as we're talking right now, and silver is down at in the 19 range right now? Yep. Why are they not responding as people would have expected in this scenario?
The first thing I will say, and again, this is not to apologize. I'm frustrated that gold hasn't reached new highs and silver hasn't broken through, but it will. And I'm very confident of that without selling my book. But the first thing you have to keep in mind is, first of all, gold loves a recession. We're not officially in a recession, though. If you look at the Atlanta Now statistics, I think we already are. Doesn't matter with inflation where we are and the Main Street economy where it is. People know we feel like we're in a recession. But gold will shine in a recession, but in a pre-recession or early recessionary stage when markets are tanking, like we're seeing the S&P 500 dipping below bear territory, the Russell 2000 down 30+%, the S&P, the Nasdaq 100, which is the all-star stocks of the Nasdaq, down below 30%. Of course, Bitcoin and cryptos aren't even worth discussing. They've taken such huge losses. Real estate markets are tanking. So every major asset class has been tanking. And yet gold, yes, it hasn't been ripping, but it hasn't nearly bled to the levels of the other major asset classes. And that's not uncommon. When there's a tanking market like we saw in October of 2008 and even in March of 2020, gold and silver can be very sympathetic with tanking securities markets. And then they rip north, they diverge, and they stop following. So I think keep in mind that, first of all, at least gold and silver, as painful as it is to watch and why they're not hitting new highs, they're not nearly in the same camp as Bitcoin or the S&P or the Nasdaq. Second point is, and this is probably the most important in terms of answering, in my opinion, the gold and silver price question, especially the silver price question, is the strength of the US dollar. And I say strength, that's a really loose word, strength. It's all relative strength. It's the best
horse. It's going up mostly because the yen and the euro are tanking, not because the dollar is going up.
Right. It's the best horse in the glue factory, best patient in the ICU fiasco. But of course, in the yen is worth discussing too. But so with the dollar having relative strength, and believe me, as this crisis was unfolding post-Ukraine, Powell was sitting down with Yellen. I can only imagine those two geniuses getting together with Larry Summers and Biden. All these, I mean, if you get into the biographies of Larry Summers, Biden, Powell, Yellen, that's like having kindergartners trying to do brain surgery. I tried to fix this. And yet their idea was, well, let's raise rates deliberately. Let's make the dollar relatively strong. Let's attract money into these markets and into this currency. And of course, markets tank. So that was an invitation to a disaster. But on a relative basis, when the dollar is stronger and rates are at least temporarily higher, and that is not a sustainable policy longer term, but right now with a relatively stronger yield on the 10-year and a relatively stronger dollar than anywhere else, that's a headwind for gold, in particular for silver, which is much more sensitive to that inverse correlation to dollar strength and silver pricing. So if the dollar is strong and yields are high, that's going to be a temporary and strong headwind for gold. The reason I have zero concern about that, and it's not arrogance, and it's not, I know it all about gold and silver and I believe in it, but it's just common sense math and history. the strong dollar and the rising rates is not a sustainable reality. That's mathematics and history. It has nothing to do with a gold or precious metal bias. When you have $30 trillion in debt and climbing public debt, the Fed knows it, the Treasury knows it, the Senate knows it. I think even Powell knows it. I think maybe even Biden knows it. Certainly Larry Summers knows it, maybe if he's awake. But the simple fact is, at 30 trillion plus in public debt, you can't use interest rate policy to fight inflation. It doesn't work anyway at these levels of debt, and you can't afford to you can't afford to pay that debt. We can't afford 5, 6, 7, 8% interest rates that would be needed to fight inflation.
So the next step that for gold and silver investors, I think a lot of us are just expecting at some point the Fed's going to pause and maybe not pivot back to easy money, but I'm thinking here's my guess, and I want to get your opinion on it, because I just have to share my opinions in this.
Of course.
I'm an opinion commentator. The Fed is going to do one more rate hike. I think that's already built in, 50 basis points, maybe 75.
Right.
Yeah.
But I'm expecting the language to change soon. I mean, the negative numbers, the Atlanta GDP now, we're probably in a recession. The language is going to change soon in their statement, more towards pause and wait and observe how the market digests the current rate hikes. Yeah. And that I'm hoping, and maybe I'm hoping too much. I'm talking my book, right? I'm hoping that'll be the trigger for gold and silver. All right, he's paused, and the next step is now pivot back.
Right.
Easier to save I think the political pressure right now is fight inflation. But once we're officially in recession, then the political pressure changes to save the economy. Mm-hmm. They've got to go back to easy money, lower rates, and ignore inflation.
I think first of all, there are no good options left. Pause, pivot, print, raise. There's absolutely no good options left for the Fed. And I think Powell knows that. I don't think the majority of politicians or virtue signaling senators and congressmen know this. But look, it's a lot like 2018 when Powell was trying to raise rates and even tighten the book. And every quarter he would raise rates 25 bips. Every month he tried to raise rates. And I said in 2018 there's going to be a bloodletting at the end of this year, because you can't raise rates when you have a stock and bond market that's so dependent on cheap debt and low rates.
Right.
And sure enough, by the end of 2018, going into 2019, the markets panicked. The 10% moves daily into Christmas. New Year's Eve was a disaster. And then what did Powell do? He didn't just pause. He paused for about 10 minutes into 2019, and then he reversed course altogether and went unlimited QE. And so that's what I said. Again, we're speculating, but it's not so much a speculation anymore, that he will have to pivot. He will have to pause and then print. And so will Lagarde, and so will other major central banks like Japan's already doing, because they have no choice. They can't afford rising rates, and to keep rates down, they have to buy government bonds to keep their yields repressed and keep rates down, because they can't afford to pay their own bills if they let rates go too high.
Yeah.
And so I see what will happen is a market crisis from rising rates into a debt bubble. Markets are already puking, but they're going to puke more. And then that's going to create pressure to pause and then reverse course, pivot, and start printing money. What I think is really dangerous about this pivot coming is more and more people are going to not have, they don't think the Fed has credibility. That instant mouse click money doesn't have the same power. The markets will react for a while, but the truth is, if you save the markets or try to control rates by printing money, fantastic. But by doing that, all you're doing is printing more mouse click money. So you're creating more inflationary pressure. So it's either a market crash or hyperinflation. And the truth is, in my opinion, my strong opinion is that the central banks of the world in general, and the Fed in particular, are completely lying about fighting inflation. Not only are they not wanting to fight inflation, they want more inflation. And that's the historical trick used by every debt-soaked empire, regime, or nation since ancient Rome to Yugoslavia to Weimar Germany to 1870 France to today. When you have too much debt, you inflate it away by debasing your currency and taking pro-inflationary policies. So we will see the QE money printers back in full swing at some point. Right now, the only reason Powell is raising rates is not to fight inflation. It's so he'll have something, anything to cut when the market dips below 40%, 50%. Wow. It's a game. It's a game.
Oh, yeah. We've got to, so let me get this straight. They've got to raise rates to kill the economy so that they have room to lower rates to save the economy.
It's like it's like you raise that point with David Morgan. It's exactly that irony. That's how schizophrenic, desperate, cornered, and solutionless the system is. And Mohammed Al-Arian, a great bond trader, said the Fed has run out of good scenarios. There are no good scenarios. So they're going to choose between a market crash and inflation. Of course, they're going to choose inflation. They're going to signal that they're trying to combat inflation. Look, when you've got inflation reported at 8.6, but using the 1980 scale, we're at 20% inflation. You can feel it from the
at least 12 to 15, 12 to 15 easily.
Yeah.
A 2%, 1%, or 50 basis point rate hike is not going to kill that inflation. Powell knows that. So that's disingenuous. They're only raising rates so that they can have a little bit of room to lower rates when the markets are tanking, but it'll be far too little, far too late. At that point,
you got to wonder at this point, to after the COVID economic recession, which was very brief because they threw $3 trillion right away in April, May, June of 2020, and then another couple trillion in the following stimmies. But I think the number was something like 5 or 6 trillion total over the course of a year and a half that they threw at the economy.
More money printed in 1 year than in all of QE 1 through 5 and Operation Twist combined in 1 year.
You got to wonder this time. Okay, so they're going to tank the economy. They're going to deflate the housing market, whatever it is. What do they have to do next time to turn things around? It took 2008. Remember when we used to think, remember the TARP bill, 800 billion, and we thought that was a big number in 2008?
Yeah.
All right, so now it took 6 trillion. What's it going to take next time? These numbers are just getting crazy. Is it going to be a $10 trillion number where we go from a Fed balance sheet of 9 trillion to 20 trillion?
It's tragic. It's sad. Remember, TARP, 800 billion felt so egregious, even to Wall Street. Even the bankers were kind of apologizing for 800 billion. And then
Congress voted it down the first time.
Yeah.
And remember, then all those guys they said, no, go vote again, Congress, until you get it right.
Yeah.
It was.
And now look at us. We throw trillions around like it's jelly beans. We don't even care anymore. We've gotten so addicted to this easy money. The same thing happened in the 1870s in France. They tried to print money. People said, no, don't do it. That feels pretty good. Let's keep doing this. And that's exactly what this is, an addiction. So there is no solution. They can print, technically, by definition, modern magical money theory allows you to print infinitum. So you could never technically go in debt, but you can't do that without diluting the currency. And Japan, as you raised earlier, is a perfect example. The yen is not the world reserve currency, but look at Japan. They have taken that mouse click money to a whole new level of insanity. They were doing QE even before us because Bernanke flew out there before and told them how to do it. But Japan is printing 100 billion yen a month just to keep yields and rates down. But look at their yen. Nobody wants their JGBs, but their central bank and their citizens are forced to buy them. But nobody wants their debt. And their yen, they have to create so much of it to keep their interest rates in control that they're seeing 50-year lows in yen.
Russia's completely out of the treasury market. China seems to be gradually reducing their treasuries.
12-year lows. 12-year lows in Chinese purchases.
I don't see. So Japan's not buying our debt anymore. Russia's not buying it. China's gradually reducing.
So who's going to buy it?
They're not buying any of the new debt. They're gradually letting it run off their balance sheet. Who else? Who are? It's
the Fed. It's the Fed.
The Fed's technically not buying right now, and they said they're going to start aggressive. Here was his words: aggressively reducing the balance sheet. He did nothing in June, right? When he was supposed to do it by 47.5 billion.
Right.
He's supposed to dial it up to 90 billion a month, I think, in the next couple of months. I don't think that's never going to happen, right?
What is it? Gretzky in Canada said, you go where the puck's going to be, not where it is now. The Fed will have to break out the money printer or the mouse click money inevitably. It's inevitable. It's not even speculating to back up a gold or precious metal view. It's just simple math and common sense. They have no choice. They have no choice.
As soon as we're in a recession, what does Congress always do? They're going to expand unemployment benefits. They're going to increase food stamps.
Yeah.
Probably around the stimmy checks before the election, if we're officially in a recession at the end of I think July 28th, we find out for the GDP numbers, then it might be official.
But Jim, where are they going to get that money for that kind of fiscal policy?
So they got to do a $1 or $2 trillion special spending bill to finance all these things, probably bail out a few states and some pension funds. And all right, so the Treasury has to sell a bunch of debt to finance all this stuff. And then it becomes a question of who buys this extra 1 trillion of, I mean, I don't know.
Oh, it'll be more than a trillion.
Something's going to break this summer or fall. Something's going to break. Probably, and it's usually in October, right? It's usually October.
No, no one knows the exact month, date, or time. It could even be 6 months or 6 minutes from now. But the point is, even tax receipts are down 16% year over year because markets are tanking. Capital gains tax. America has less income and more deficits. The only way to fill that gap is with a magical money printer. And that means you're going to debase your currency further. We're not going to see positive. When your debt to GDP ratio goes above 120%, mathematically, you lose growth by a third. So we're not growing our way out.
What
no one else is buying it.
140?
I think 125, 122, 125 debt to GDP ratio. And so Japan is well past 200 and they're already dead on arrival. The point is, the only solution is more money creation until we have a global reset and a blockchain-based central bank digital currency, et cetera. Right. That's further down the road. But we're going to have a very disorderly moment of pain, which policymakers from Powell to Biden will blame on Putin and a virus with a less than 1% death rate. They'll blame it on these events and these costs. They'll never take responsibility for saying, no, it's actually been 15 plus years of printing money like drug addicts and alcoholics who can't say no. And I've joked, if any of us had a money print in our basement and we had a bill to pay or kids' tuition or a wife wanted a new car or we wanted a vacation, all we had to do was go downstairs and click a button. Who wouldn't be tempted to do that? Right. It would become very addictive. When your government does that, it becomes criminally addictive, criminally negligent. And the criminal negligence, and I think even the moral irresponsibility for a politician not to point the finger where the blame is, it's at their own policies. The idea that you can live on a debt policy to solve a debt problem with money created out of thin air. That's
very few politicians. I mean, Rand Paul would point it out.
He would.
Thomas, in the current politicians, I saw a great video. Thomas Massey, I think his name, a congressman, was very point blank pointing this out. So he doesn't have the fame of Ron Paul, but he's a guy in Congress who but other than that, very few politicians have been.
Very few.
I wonder whether the politicians even understand it. Most of them are pretty economically literate, I think. I think some of them understand it, but probably 90% of them don't understand it.
They really don't. And this is what we talked about in my presentation in Frankfurt. They really don't understand. And to the extent they don't want to understand because they're self-interested. Their will to power, to stay in power is so pathological that they're not willing to take responsibility for real problems. Instead, they just want to get reelected. You get reelected by buying votes. You buy votes by having a strong economy. You have a strong economy temporarily by printing money to pay for every problem. Wow. But when that money becomes so debased that the man on the street can't buy gas, groceries, or a weekend Airbnb because it's so diluted, that's when your game is up. Your game of solving every problem with debased currencies ends. And then they start looking for anyone to blame but their own ignorance or their own deliberate ignorance. So they'll blame Putin, they'll blame South America, they'll blame a virus. And the other really sad thing for both of us, all of us to think about, but to think about is, look, this is another historical fact, not an opinion from a gold executive in Switzerland. Every single debt-based crisis in a regime or nation has always ended first with a market crisis, a currency crisis, social unrest, and then extreme political control from the left and the right. Whether it's left or right, there's more and more control over your life and your freedoms and your money. And even central bank digital currency, they'll track everything you do. The lockdowns, the arrests in Canada for protesting, the use of the Emergency Powers Act, everything that was once normal and free and politically accepted has now become a threat to security, democracy, and safety. And that is a sad trajectory of events, not just where the gold price is going to go north, and so will the silver, as the dollar eventually inherits the karmic reward of debasing itself for decades. But when that happens, rather than take blame, you'll never see Powell take responsibility, or Greenspan, the patient zero of this, or Bernanke. They will never say, gosh, maybe we got a little bit too excited with that money printer. Maybe we should have just had austerity. Maybe it's our fault. They'll never say it, never. And that to me is appalling.
Well, thank you very much, sir. We appreciate you joining us. This is a lot.
Yeah, it's great.
It was,
not optimistic.
A lot to think about. Your book is Gold Matters, and we'll put the link in the description. And Egon von Greyert, so you're co-author on that book.
Yep.
And you work with him regularly in your company.
Yeah.
We appreciate you joining us. It's been very entertaining, and we'll have you back in a few months.
It's been my pleasure. Thanks for having me.